right, good afternoon, everyone. Welcome to today's webinar, How to Swing Trade Breakout Patterns. My name is Jerry D'Ambrosio. Glad to be with you folks here today. I just want to do a quick sound check just to make sure everybody can hear me okay. If you guys don't mind just using your respective chat boxes, just letting me know that you can hear me. I want to thank everybody joining us via YouTube as well. I don't see anybody chiming in just yet. All right, well, fantastic. Welcome everybody. I had my mic on mute in the GoToMeeting, so again, welcome everybody to our webinar today, How to Swing Trade Breakout Patterns. My name is Jerry D'Ambrosio. Glad to be with you guys here today. For those of you who are joining us via GoToMeeting, if you would just chime in, let me know that you can hear me, that you can see my screen, so I know we're all ready to go. And again, one more time, I want to thank everybody joining us via YouTube as well. There we go. Raj says all good. Tom says yes. Dennis says yes. All right, awesome. All right, fantastic. All right, guys, again, my name is Jerry D'Ambrosio. I'm the manager of educational content here with VectorVest. I just want to preface today by saying bear with me here. Woke up today quite sick. Not sure exactly what's going on, but if you hear my teeth chattering and coughing and breathing heavy, you know why. But I'm here today, and I want to thank you guys for being here today. Again, bear with me. I'm going to get through today as best I can. Just so you guys know, you will get a replay. I'm not going to send out today's replay, but I'll send out one of yesterday's replays. Both of them went great yesterday, so you guys will get yesterday's replay, just so you know, just in case we have any issues here. But thank you, Daryl. Appreciate that. And I'm just one part, guys, of our education department. Fantastic education team. We're always striving to, make sure you understand the VectorVest program first and foremost. And then what we've really developed into is an education department where we teach you different investing and trading techniques. One of my biggest role is really in the swing trading faction of the education department. We have some good option guys that really are focused in on options training. We have some other folks that Patrick, for example, Patrick France, he's our mobile guy. So we really developed and have a great education team that caters to everybody, no matter what type of an investor or trader you are. And that's what we're going to do today, actually. We're going to talk about swing trading. The title of the webinar is How to Swing Trade Breakout Patterns. So that's one we're going to teach you guys here today about breakout patterns. And what I want you to do, I hope you guys can, is stick with me to the end. If you stay with me to the end, I'll share with you a copy of today's slides. Just somebody remind me at the end, maybe, what is it, 4:30, about 5:15 or so, just say, hey, Jerry, don't forget the slides. And I'll put them in the handout section of your GoToMeeting control panel. And those of you that are joining us via YouTube, you'll get the slides as well. And if anything ever happens, guys, where you don't get the slides, you can't find them in your inbox or whatever, just give our support department a call and we'll send them over to you. Okay? All right. So the breakout pattern or the patterns, excuse me, that we're going to talk about today. Here's kind of a synopsis of what a continuation pattern is. It can be sideways or counter trend price action that represents a pause in the current trend move. And we're going to be talking about bullish patterns today. Okay, so sideways or counter trend, meaning price pulling away from, down sloping away from the previous trend. Okay, and that does represent a pause in the current trend. We look for a breakout. We're not going to trade the pattern during the consolidation period. We wait for the breakout, and there's certain things that you have to be aware of before you take the trade. And it says next price move is usually in the same direction as the trend before the pattern. Okay, this is going to become much more clear when we look at charts and look at examples. But the two continuation patterns that we're going to talk about today are flags, bull flags, and triangles. Okay, now there are three different types of triangles. Let me show you guys. I'm going to attempt to use my pen here to draw the different kind of triangles that you'll see. So first is a symmetrical triangle. This is what a symmetrical triangle looks like, also known as a wedge. Prices move sideways, but get squeezed in tighter and tighter, and then you wait for the breakout, right? So what's happening is higher lows are being established, but also lower highs. So it's really a battle, really a tug of war between the buyers and sellers, right? Something's got to give at some point. You know, prices can't really get squeezed in too much tighter there. So you wait for a breakout, really in one direction or the other. Then there's what's called a descending triangle, and it looks like this. Okay, you have this downward sloping trend line where you have lower highs being put in, but at the same time, price is establishing a pretty significant area of support. Okay, now this could be potentially a bearish formation. Okay, if support breaks, price is going to fall below it, and that's a bearish opportunity. If you're long the trade, you would close the position. If you're not in the trade at all, that would be an opportunity to short. And then what we're going to talk about today is called an ascending triangle. Okay. Yeah, I'm drawing it right now. Okay. Where you have, it's pretty difficult to draw with a mouse if you ever try to do that, but you have a level of resistance, but the buyers and the bulls, they're putting in higher lows. Okay. Thank you, Lan. I appreciate that. All right. So we're establishing a level of resistance. Okay. So the sellers are doing their best to not allow price to rise any further above that resistance level. But buyers are coming in. They're establishing higher lows, right? And what we wait for is a breakout to the upside. That's a potentially a bullish pattern. Okay, so let's get right to it. Let's talk about flags first. A flag pattern appear in strong uptrends. So we're going to be looking at some charts, and you know, it doesn't necessarily, you don't have to look at a chart, a 52-week high. That's not necessarily mandatory. Okay, you're looking at a 3-month chart. Remember, we're swing trading here. So if you're looking at a 3-month chart, a 5-month chart, a 6-month chart, you're looking, and not always the case, but what you want to see is higher highs, higher lows. Okay. And the first characteristic of a flag is a sharp up move, followed by a down sloping or sideways price behavior on light volume. And let me say this, that sharp up move has to be accompanied by high volume, increasing volume. There needs to be conviction in that strong vertical move. The down sloping consolidation period or the sideways consolidation period, it generally will be accompanied by low volume. The pattern completes in about 1 to 3 weeks. Okay, we're not talking about a month, month and a half. 1 to 3 weeks the pattern will complete, and the period, the consolidation period, is usually a couple of weeks. Any longer than that, you have the potential of the uptrend breaking, right? So if you have a downward sloping consolidation period that lasts for 4 weeks, 5 weeks, it's a good chance that the uptrend that you've been in, right, will likely be broken. And if it's a consolidation period that moves sideways for 4 weeks, 5 weeks, 6 weeks, now you're talking more of a rectangle pattern, which is another continuation pattern, but not one that we'll talk about today. What I love about flag patterns is they have their own built-in stop loss level and profit objective. So it's called the measured move because you measure it. You measure how far you should expect price to move to after the breakout, not, you know, during the consolidation period. It's after the breakout. You measure how far price should expect to move to, and that's where you'd set your initial profit target. Okay, again, we're going to look at a lot of examples here. The stop loss. So let's say you get your breakout. You get your breakout. You take the trade the next day on follow through. Okay. The stop loss is going to be the low of the flag formation. So here's what it looks like. Okay, this is just a diagram. We're going to look at real-time chart examples in a moment, but here's just a diagram. So here's your sharp up move. I know we don't have volume at the bottom there, but it needs to be accompanied by strong volume. Doesn't have to be bigger and bigger every day during that up move, but it's got to be above average. Okay, and then, I'm sure you guys have been in trades like this, right, where you get this nice sharp up move, and then party's over. You get this period of consolidation, right? Not a mass exodus, because you'd be looking at just a crash, right? You're just looking at a crash. Let me get rid of that. Okay. So you're being patient, you're waiting it out, you're seeing this consolidation pattern take place. Okay. And then you wait for the breakout. You wait for the breakout, and there's your breakout candle. There's the close above the upper trend line there. And that breakout needs to be, you want that to be on really high volume as well. So you don't trade the breakout day, right? You don't trade the breakout day, as tempting as it might be. You trade the following day on confirmation. Okay, the following day on confirmation. If you do take the trade, and a confirmation is when price rises above the close of the breakout candle. Now, I know different techniques we'll teach where we'll use the high, right? The previous day's high. The textbook flag pattern confirmation level is the close of the breakout candle. You can use the high if you wanted to. I mean, I guess it'd be a little safer, a little more conservative entry. But you can also use the close as well. Now, if you do take the trade the following day after confirmation, where do you set your initial stop loss? I mean, that's first. You set your initial stop loss right below the low of the flag pattern. Okay, right below the low, not right at the low, not right above the low, a little bit below the low of the flag formation. So here's the flag pole, and here's your flag. So you put your stop loss a little bit below the low of the consolidation period, so that if you're wrong, you have a rather tight stop. We're not looking. This is not an investment where you hold on for, months or longer. We're looking at a couple of weeks, maybe a month. Just depends on performance. But you're keeping a very tight stop loss here, and it's going to be right below the low of the pattern. So what's the measured move? So we talked about that earlier. So the measured move is the length of the flagpole. So you take this price, you subtract it from this price, which is the top of the flagpole. You take the difference and you add it to the closing price of the breakout candle. Okay, and that is where you should set your initial profit target. Okay. All right, so here's an example. Here's Zebra Tech. Don't worry about the time frame. If I have time here today, I'm going to show a recent example of a trade that I actually took in our swing trading coaching group about a week or two ago. A bull flag breakout, beautiful setup, and I'll show you a more real-time example. But these are historical examples. It's fine. You have to visualize what the pattern looks like historically, so you know what they look like currently. So here's your sharp up move, right? Look at that volume. In this case, it was bigger and bigger, higher and higher volume every single day during that up move. Then you get this period of consolidation. So it's somewhat downward sloping, right? It's not exactly sideways. It's downward sloping. You're seeing this lower trend line here connecting the lows, the upper trend line, connecting the highs. And then can you see where the breakout is? Breakout's here very clearly. There's your breakout. Look at that volume day. Really nice breakout. Okay, really nice breakout. Now the confirmation level, I know again, it's tempting to take the trade that day, but you want to wait for confirmation. And we got it the next day. It's hard to see that really. Let me just show you real quick. Price did go above the close, didn't go above the high. So if you were using the high, you had to wait a couple more days. But if you were using the close and you waited for confirmation, you got it the next day, worst case the day after. All right. So there's your breakout day. There's your trade. Where do you set your initial stop loss? Well, I know where the low of the consolidation period is. It's right in this area here, so I'll put my stop loss right below it. I'll put my initial stop loss right below it. All right. Where do I set my initial profit target? Well, I will measure the length of the flagpole. So I'll take this price, subtract it from this price, and add it, and take the difference, and add it to the closing price of the breakout candle. That price, the sum of those two prices, the close of the breakout candle, plus the difference between the bottom and the top of the flagpole, is your profit target. Okay? Now this is all, I haven't put numbers to this yet, guys. I'm going to put numbers to it when we look at the real-time example in a moment. All right? Just want to get you guys comfortable with the technique, how to set your stop loss. Don't worry about what price you're setting it on any one of these charts just yet. It's where do you set it, and how do you measure the expected move after the breakout. Okay, so here's AMD. There's your new high. There's your sharp uptrend. 1, 2, 3, 4, 5, 6, 7 days in a row the stock went up. Nice volume there, accompanied by good volume. Now you get this downward sloping period of consolidation. Lower line here connecting the lows, upper line connecting the highs. Clear breakout. I mean, it should not be a question. You shouldn't think, well, price did close barely above that upper trend line, but the volume wasn't that good. No, it needs to be clear. You really want it to be a clear breakout. Look at that volume. Oh, by the way, look at the volume that accompanies the period of consolidation, right? Drying up volume. And there's no particular level, meaning, you know, it doesn't have to be a certain amount of shares traded. You know, generally, for the most part, during that period of consolidation, you want to see volume lower than average. Not every single day, but for the most part, lower than average, and I think we see that there. Okay, so the next day, the stock opens here, rises above our confirmation level during the day. So theoretically, you could have taken the trade. It did sell off, right? It did close near the bottom of the body, but it did not close or did not go below the low of the consolidation period. That's where you set your initial stop loss. And let me talk for a second about position sizing. Position sizing is important because I know I say that, you know, generally you want to keep a tight stop, but it just depends on how big the breakout is, right? And then where price moves to the next day and what price you get, and where the low of the consolidation period is. So it really depends. I mean, generally we're keeping a tight stop, but you know, if the stop on any particular trade exceeds you losing more than 1 to 2% of your overall portfolio value, so the 1 to 2% rule, don't risk any more than 1 to 2% of your overall portfolio value on any one position. If the stop loss on a particular flag breakout trade exceeds that, then you have to reduce your position size. So if you wanted to put 20 grand into the trade and you had a $100,000 portfolio, you didn't want to risk more than $1,000 on that trade because 1,000 is 1% of 100,000. Well, that's a 5% stop loss. Well, if you're looking at a setup and you take the break, you take the trade, it's a good breakout, but your initial stop loss is greater than 5%, let's say it's 10%, well, then you can't put 20 grand into the trade, because if you experience max pain, you just lost $2,000. So it's more than the 1% that you want to risk. So you cut the position size in half. Okay, so position sizing is important. And you always want to stick to that 1 to 2% rule. Again, we try to keep it closer to 1%. There is no searches for this, guys. Raj is asking, can we use the Unisearch explosive breakouts to search for the opportunity? That's a different search entirely. There is no search in Unisearch for flag breakouts, unfortunately. I'm still hard at work in trying to create one, but I'm just not there yet. All right. So you take the trade. You're welcome, Raj. You measure the length of the flagpole, you take that price, you subtract it from that price, you take the difference, you add it to the closing price of the breakout candle, and that's your measured move. And if that price is reached, you want to take action. Okay? You can sell the whole position if you wanted to. If you want to take half off, you can do that. Let the rest run. Raise your initial stop at least to entry at that point. So if you do reach your profit objective, and let's say you take half off, well, don't leave your initial stop down here. At least raise it to entry, so that if things go wrong and the stock price falls after you take half off, you're going to net a winning trade, even though this second half that you've kept. Now I know that didn't happen here, but the second half that you kept, if price falls back towards your entry, sure, you don't make any money on the second half, but you made money on the first half. And it's, again, net winning trade. And that's at the very least, you raise your stop to entry. If the price keeps running, just keep raising that stop. A little bit below that level, if it keeps running, just keep raising it. A little bit below that level, and so on. Okay, you're allowing your winners to run here, which is good. All right, Regeneron. So here's your flag, your bull flag. There's your flagpole. There's your period of consolidation. Only about a week or just about a week actually, 6-7 days in this consolidation. Now this is a sideways pattern, right? It's not down sloping. So good volume on the ascent, drying up volume during the period of consolidation, monster breakout on high volume. You take the trade the next day. Okay, you set your initial stop loss right below the low of the consolidation period. Calculate what percentage risk that is, right? Because then you have to adjust your position size according to that. All right, take this price, subtract it from that price, add it to the closing price of the breakout candle, and there's your measured move. All right, let me show you guys now a recent example. Oasis oil company. This was a trade that I took in our swing trading coaching group just about a week or so ago. So the hard right edge is June 10th. Okay, that's the hard right edge. So I think I found this one. In our swing trading coaching group, it's a great group. Either I'll find potential trades for us, or the group will. Members of the group will say, hey Jerry, look at this one. It looks like a good, either bull flag or ascending triangle or a 50-50, if it's a trade like a pro technique that I taught them in that group. But I found this one because petroleum is a hot sector. It still is, right? If I go to the home page, it's the #1 sector in our program, and 3 of the top 5 industry groups are petroleum. Jason says, how do we know that we are in a flag pattern? Because it looks like that. That's the hard right edge. That's June 10th. So let me go through the characteristics again. Do you have a nice sharp up move, making a new high? For the most part, you get 3 or 4 days during that period of higher than average volume. Okay? Then you get this downward sloping period of consolidation. Okay, on what? On lower than average volume almost every day during that. Oh man, I just cheated. Now you see what happened afterwards. Almost every day during that consolidation period, you had lower than average volume. So the breakout happened the very next day on a little bit higher than average volume, and I took the trade the next day on confirmation. It says my initial stop loss is $89.50. Well, where is that? Right below the low, 89.50, right below the low of the consolidation period. That is where I set my initial stop loss. Okay, I set my initial profit target at $112. Now, why did I do that? Well, the bottom of the flagpole is $78. The top of the flagpole is $95, so that's $17. Add $17 to the closing price of the breakout candle, which is $95. 105 is 10. 112 is $17. $17 added to the closing price of the breakout candle. That's where my initial profit target is. Now, we didn't get there yet. It's been a good trade so far. We're at 103 bucks, so we're getting there. We got a nice gain on the trade so far. Okay, so that was a real recent example with some numbers put to the examples. Okay. All right, let's talk about triangle patterns. Triangle patterns now. So triangle patterns, the characteristics are price consolidations that begin to narrow in a sloping direction. I drew 3 different types of triangles earlier. Volume decreases during the formation and increases on the breakout. It's another very important characteristic, is you need, increasing volume when the stock breaks out of that triangle pattern. But during the pattern, you want decreasing volume. The measuring objective is the distance from the top to the bottom of the triangle. Now, this is a little subjective. I'll show you why. So here's an ascending triangle pattern. I drew this earlier. So you have a level of resistance, 1 touch, 2 touches, 3 touches, 4 touches, but you have higher lows being put in, and then you get your breakout above resistance, confirmation the next day. Okay, same confirmation, the close of the breakout candle. You set your initial stop loss right below the low of the last touch of the trend line here, the bottom trend line that connects the higher lows. Thank you, Jason. So you put your initial stop loss right below the low. Now, there's a variation to managing the trade. You could put your stop loss right below the low, or you can put it right below support. If you're a little bit more conservative, you want to keep a tighter stop on it. Remember, this was resistance, and when price breaks out through that level, you get followed through that resistance level of support. So you could raise your stop, keep it a little tighter, and put it right below support, so that if you do get a retest, and I'll show you a trade recently that we took in our swing trading coaching group where I didn't trade the breakout, I traded the retest of support. That's another variation of an entry. The first one is trading the breakout itself. Okay, if you happen to miss the breakout, but you see, a nice retest of that support level, you trade the retest of that support level. Now, the measured move, it says it's the top to the bottom of the triangle. Now, I'm not too greedy where I have to measure it all the way down here, right? And I'm not too conservative where I'll measure it in this area here. I'll split the difference. I'll take this price, I'll subtract it from this price, and I'll add it to the closing price of the breakout candle, and that's where your measured move is. Okay? All right. Helen of Troy. Personal cosmetics. So here's your ascending triangle. Here's your resistance touch. Here's another touch. There's another touch. There's your last retest here. but there's a higher low, and there's a series of higher lows here during the end of the pattern formation. These are daily candles. These are not weekly candles. Daily candles, and this is cherry picking, guys. This is a cherry picking technique. I think that's important. I love scans. You might have heard me say that before. I love scans, but every great trader knows how to read charts. All right. So this is a lesson in chart reading, in pattern recognition, and then breakout, and then trade entry. All right. So here's your breakout. Price closing above resistance on higher than average volume, and you take the trade the next day. You got confirmation, didn't you? I know price opened higher, ran a little bit higher during the day, did close really right at support now, but you did take the trade the next day. All right, thank you, Jim. So if you do take the trade, where do you set your initial stop? Now here you gotta where am I going to set it? I'll probably set it right in this area here, right below the low, maybe a little higher, right below the low of that last touch there, of that trend line. That's where I set my initial profit target if I took the trade. I don't need to measure it, the measured move from here. I don't want to measure it here. I will measure it right in the middle. I'll take the meat of the triangle pattern. I'll take that price. I'll subtract it from that price. I'll add it to the closing price of the breakout candle, and that's where your measured move is. All right, here's another one, Trek. Same type of pattern. Rally, retreat, however, not establishing a new lower low. Another rally, but we're not seeing higher highs either. We're establishing a level of resistance. Another retreat, another rally. That rally followed yet another higher low. There's your breakout. There's your breakout day. There's your breakout day. Look at the volume too on that breakout. My initial stop loss is going to be put in right under, I'd say about a quarter or so, 25 cents. Now it all does depend on the price of the stock, right? If you're dealing with a $5 stock, anything below 10 bucks, I don't know if a quarter makes much sense. Maybe you want to go 12.5 cents below the low of the consolidation period, but a quarter is a nice start. Okay, when I say by a quarter, between 25 cents. All right, now here, yeah, you can spot these breakouts, guys. So question is, if I'm not at the computer all day, how do I spot these breakouts? You don't have to be at the computer all day. You can spot them at night, right? Because the true breakout, the breakout that we're looking for, is a closing breakout. Is price closing above, not just going above during the day, closing above resistance in this case. So it is a matter of running through some watch lists, right? Looking at the S&P 500, our top VST stocks, any watch list that you create. You can look at industries and sectors, the top stocks in the top industries and sectors, cherry pick. And on a closing basis is what you're looking for. It doesn't have to be where you're rummaging through a bunch of stocks during the day to find it, because it's inconsequential. It doesn't matter. It doesn't matter if price rises above resistance during the day. It matters if it closes above that level, right? And then you enter the trade the following day. So if we did enter the trade the following day, look at what happened here. Price came back down to retest that support level successfully, I might add. So your initial stop can be here, right under the low of the last touch within that triangle pattern, or you could put it right below support, not at support, right? Because if you get a retest of that support level, okay, thank you, I appreciate that. If you get a successful retest, right, you don't want to put it at support because you'll get bounced out, right? You'll get triggered. You'll get sold. Put it right below support. If price breaks down through support, all right, you're wrong, and then you move on. All right, here's CDE, same pattern. Rally, retreat, rally, putting in a higher low. Look at that congestion. Look at that resistance level right there. Right? Another higher low, another higher low, another higher low, breakout. Okay? Breakout on good volume. Stop loss can be one of two places. It can be under the last touch of that trend line, or it could be right below support. The trade can be taken one of two ways. Now, here's the drawback, I guess, of not trading the breakout or waiting for the retest. You might not get a retest of support. You might miss the trade. You might miss the trade, right? So I'll take my measurement right in this meat area here, right in the middle. Take that price, subtract it from that price, add it to the closing price of the breakout candle. All right, now let's look at a recent example. Close your eyes, everybody. Close your eyes. I want to show you guys the setup first before what happened afterwards. All right, so the hard right edge is June 1st. Here's my little note that I drew on the chart. So doesn't this look familiar, right? This is the Moderna. I mean, if there's ever a stock that's been in the news lately, it's Moderna, right? So this rally failed to make a new high, but along the way, we see higher lows. So I just drew my line here, connecting the higher lows. And look at some of the period too later on. Look at the volume later on in that channel, below average. Okay, then I'm going to fast forward a couple of weeks. I did not trade the breakout. I did not trade the breakout. I don't know why I missed it. Somebody might have in the group brought it to my attention and said, "Hey Jerry, look, I think it was June 10th actually. Now June 10th was a Thursday, right? That was 2 sessions ago. We meet every Thursday at 2:30 p.m. Eastern time. So 2 weeks ago today, somebody said, hey, and again, the hard right edge is June 10th. Hey, Jerry, look at this one. It's not only maybe a little mini bull flag, but it's also an ascending triangle breakout. Okay, and I think that the student in the group, the member of the group said, hey, listen, we didn't get the breakout, but let's wait for a retest. And lo and behold, we got the retest. We got the retest. I'm going to take this line off because I want to show you. I'm going to add support and resistance right there, that red candle there. Got in the zone, in the support zone, and I entered the trade the following day on that retracement off of support. Michael says, how does pre-market and after hours action affect these setups? It doesn't. They don't. They don't. So it's the close, 4 p.m. Eastern time. Is price, did it close above resistance in this case? All right. I actually used a different method in determining my initial stop. It so happened to land right below support, $182. And the reason why I used $182 as my initial stop loss is because that's 2 ATR, 2 average, 2 range below my entry price. It so happens to be right below support. That's kind of a lesson there in using average to range. Look, average to range is great. You recognize 2 ATR. You set that right below your purchase price. But the question that you have to ask is, does it make sense? Does that stop make sense on this particular chart? If 2 ATR just happen to be right at support or a little bit above support, I'm not going to use that. I'm just going to go a little bit below it and put my stop right below support, which I did, $182. Okay, fast forward. and I set my initial profit target at the most recent swing high. That was my initial profit target, 227 bucks. We actually got to $224.55 yesterday, so I took half off. And I raised my stop now from 182 to entry. So that if price, and I'll just fast forward one more day, today was an up day. Not a breakout yet, not another new high, but another update today. So I raised my stop now to entry so that if price does fall back and retest that support level again, and I don't want to lose on the second half of the trade that I've left on the table, entry is where I'm going to set my stop, so that I'll net a gain on the trade. Okay, Raj is asking, when would you have a search for this? I don't know, Raj. I'm working on it. I'm working on it. All right, guys. What did you guys think? Good information. I know Jim said great info. A lot of you guys are chiming in saying this is good stuff. This is only 2 patterns. There are a lot more continuation patterns. There are a lot more different breakout patterns as well. So I want to thank you guys for joining me here today. What I want to do now is talk about a course that we are offering. It's called Precision Swing Trading. Notice in module number 5, I will teach about flags and triangles. I'm going to teach you all the other triangles, the symmetrical and the descending as well. I'm going to teach you about rectangles and pennants, which is a form of a flag. Okay. Yes, Jason, I'm loading up on that as soon as I'm done here, and night for me. Jason says Sudafed works well for me. Yes, right back to bed. But but just again looking at all of the other modules here. Thank you. So by the way, myself, Steve Chappell, and Dr. David Paul, we are your 3 instructors here for this course. Dr. David Paul kicks it off with a great talk called The Anatomy of a Swing Trade. Okay. Going through price and volume structure, managing risk, position sizing. Then we get into the different types of markets that you will encounter, trending markets and channeling markets, and the different indicators that are ideally suited for those type of markets. Steve comes in module 4, double tops and bottoms, head and shoulders, inverse head and shoulders, how to recognize the patterns, how to trade them, where to set your stop losses, and where to set your profit targets as well. And then module 6 is my favorite. This is kind of where we wrap everything up. How to set up, execute, and manage your trades. We'll review everything in modules 1 through 4, and then do some real trading, looking for real examples. Okay? Yes, I will not forget the slides. Thank you. I appreciate that. And I'm going to go ahead and do that in a moment. So let's talk about some of the bonuses for the course. If you don't already have VectorVest Premium, we're going to give you 60 days access to it. The trial will begin on June 30th. We want to make sure that everybody has all the tools necessary for the duration of the course. Okay, so 60 days access to VectorVest Premium. I'm also going to invite you, I talked about our swing trading coaching group that we do every Thursday at 2:30 p.m. Eastern Time. I'm going to invite you to 6 classes, 6 sessions during the duration of the course. Those sessions will be recorded and archived in your Precision Swing Trading course outline. Okay? Now, regular price for the course is $9.95, but we've extended our Father's Day special all the way to the end of the month. Basically, that's when our first mastery session is, which I will talk about here in a moment. But I want you guys to go. I'm going to type the address that you see there, www.vectorvest.com/PST. If you just click on the link that I put in the chat box, you can get right to the registration page. www.vectorvest.com/PST. Only $495 is basically half off the regular price. You get 6 pre-recorded modules. You get 6 live mastery support sessions. 60 days access to VectorVest Premium if you don't already have it. An invitation to 6 swing trading coaching groups, and our live mastery sessions as well. They will begin on July 6th, every Tuesday at 2 p.m. Eastern Time. These are also recorded and archived in the VectorVest University, and we're going to throw in a bonus session called How to Short Stocks with Confidence. This is going to be on Tuesday, August 17th at 2 p.m. as well. Okay, so if you go to www.vectorvest.com/PST, you can click on the purchase now and register. I put the slides, guys, in the handout section of your GoToMeeting control panel. All right, you should see it says Precision Swing Trading. It is a PDF. It's in the handout section of your GoToMeeting control panel. If for some reason you don't see it or can't open it, just give our support department a call, or you can email me, actually. Email me at Jerry D, Jerry, D as in David, at VectorVest.com. All right, Joe, email me if you can't download it. I'm sorry. Everybody else have able to open it up? Okay, yeah, it looks like everybody is able to open up. Just email me, guys. Jerry D, Jerry, D as in David, at VectorVest.com. Now, this session is being recorded, but I am not going to send out this session. I am going to send out the first session I did yesterday, which went really well. So you'll get that recording, guys, later on this evening. Okay. Thank you, Kevin. I appreciate that. Yeah. Oh, so the elite rate, guys, is the same. The elite rate is the same. Now the elite rate is normally $497.50, but since we got the Father's Day special going, everybody pays $495. $497.50 is half off the regular price, but we do have our Father's Day extended special going on, so it's $495 for everybody. Okay. Thank you, Franco. I appreciate that. Thank you, Kevin. Appreciate that as well. Guys, if you have any questions, shoot me an email, jerryd@vectorvest.com. Hoping to feel better tomorrow and bounce back. But I want to thank you guys for bearing with me. I look forward to working with you. You know, we start in a couple weeks with our first live mastery support session. So looking forward to it. David, Paul, Steve Chappell, myself, you're in good hands. One of my favorite courses to teach because, you know, the three of us are traders. So we like teaching this stuff. All right, guys, have a great rest of your day. Have a great weekend, and we'll see everybody soon. Take care, everybody.